morning, everybody. Happy Motivation Monday. This is Nick Murillo, Trainer Nick, checking in with you guys. So for this week's Motivation Monday quote, I am going to start with my theory is that if you look confident, you can pull anything off, even if you have no clue what you're doing, right? From Jessica Alba. That's a quote that I kind of have geared my life around, right? Just fake that confidence, right? And a lot of times that confident answer is a good answer. So, especially in this industry, there's so much to know, so many different products to know. A lot of times having that understanding and being able to give that confident answer that you either know or that you'll find that answer for them goes a long way in customers' perception of you. So great, guys, we're going to go ahead and get started this week. Again, July 15th here. So happy Motivation Monday. This week, as with every week, we will have a tip of the week for you. We will go over our sales shout-outs and sales leaders for this week. This week's topic, I come from the banking industry, actually. I was an operations manager in the banking industry for a lot of years, so I'm going to go the route of personal financial management geared towards brokers for health insurance, right? And so it's going to be mainly personal financial management. I'm going to have some little tips in there to gear towards our business model, right? And then last is the survey at the very end, okay? So as we get started here, guys, the tip of the week for this week, you guys might have seen this, it came out. We now have MedSup rates available in Coverage Builder. So Quote It has built it, it's got it in there. This should make quoting a lot easier for you guys as you're able to use just one platform now for all of your quoting needs with NatGen, right? Now, the enrollment piece of this is actually still going to stay the same, and this is strictly for quoting within Quote It. However, Quote It did integrate with the current NatGen MedSup enrollment platform. So if you're in Coverage Builder, you do the quote and your client likes the plan and you choose to enroll, Coverage Builder will actually redirect you right over to NatGen's current MedSup enrollment platform. So shouldn't be that difficult for you. Everything's kind of done on the back end for you. It's just that these rates are now available for you to quote and available in 37 states for you guys to quote it in there. So if you're not already doing that, haven't done it, check it out. Especially to those of you that are already selling in the Medicare business, but for those of you that are interested as well and maybe hopping into that and looking at that, definitely great thing for you there. All right, this week, so last week, the week of July 8th, are sales leaders and kudos. So short term, this week was a landslide United. We sold a ton of United short terms last week. Limited Med stayed the Health Protector Guard with Golden Rule. Accident, also Golden Rule. So it was a big United week for us in general. Honestly, a pretty big week. I liked some of the numbers I was seeing. Critical illness, we still have NatGen doing the best for us there. And then dental, Emeritus coming in strong for us there as well. So great selling all around, guys. We really had some big numbers on United this week. So great job there. As far as short term, this week, Jacob Gordon came in number 1, so great job, Jacob. Evan Tunis and Daniel Riss, all you guys top 3 short term. A couple names that I'm not very familiar with on there, so great job getting on this list. Let's keep up that good work, guys. Again, there were some big sales this week, so great job there. Limited Med, Jacob Gordon and Katia Santa Maria, thank you guys. You guys are always on here, so great job there. And then Accident, Don Trotter again, 2 weeks in a row, and then Christine Jesse. So, guys, great job this week on sales. Again, some of these numbers were pretty big this week. Love seeing that, especially in the middle of summer here. So, great job, guys. So now we're going to jump into that personal financial management, right? And obviously, the first step in anything with financial management is to set up a plan, right? So how do we do that? The first thing that we're going to do in setting up a plan is create a budget, right? Now, this isn't always easy for people, right? In some cases, you might need a couple separate budgets depending on what you're trying to do. Maybe one for your personal and then one for your business. As well, take into account the advance options that you've chosen with your carriers, right, in creating that budget, because there will be a little bit of a loss in there sometimes on chargebacks and everything like that. So take this stuff into account as you're creating your budget. Know what your advance options are, kind of figure out what you're spending each month and everything like that. And I'm actually going to dive into a budget a little bit for you guys in a second to show you some examples of that. Next, find useful tools. Now this, in 2019, guys, this has become really, really easy, right? In today's world, there are a ton of free apps out there that can really help you create and manage your budget. Also manage your monthly finances, right? Keeping track of your receipts, your expenses. I mean, you name it, there's an app out there for it now. You need to make sure that you find what works best for you and then use it, right? A lot of times people play with a few of these, but it's too much of a lifestyle change and they just don't want to do it. They don't want to put in that extra work. Guys, it is very important that you find one of these that works for you and your lifestyle, but that you use it. It is hard to stay on top of our finances. Use an app that works for you. And then the last major thing, guys, is to set goals, right? No plan is complete without the goal that you're trying to attain, right? Are we trying to plan for our retirement? Maybe you're a little bit younger now and the focus is more on accumulating wealth or growing your business that you've just started, right? Depending on what your goals are, this will heavily change how you're going to attack your plan, right? So some things to consider, and then we're going to dive into these three a little bit for you guys so we can, what does this look like, right? So the first thing is creating a budget, right? So I'm going to show you an example of a budget that I've just kind of quickly created, and I've ran this both for personal and for business. You're going to tweak this a little bit, and I'll show you where you can do this. Again, you might have to do two separate ones like I have so that you can understand where your totals are that you're spending on your personal side and on your business side, and maybe where some of those gaps are, right? Once you've created the budget, you'll know what you currently are spending month to month on average, and that'll kind of help you plan, right? So this is kind of just what it looks like. This budget here is based around trying to get an idea of what you spend each month, okay? Now, again, there's a million different ways you can do a budget. This one, the goal of what I was trying to get here is what am I spending each month? You'll notice I left income off of here. And why would I do that, right? Well, the biggest reason, especially in this budget that I've created, you guys are health insurance brokers. It can be very difficult to know or to estimate what you're going to bring in month to month, right? We all know this. We've been through it. It's much easier to figure out on average what you've been spending month to month, right? And the easiest way to do that is just set up something just like this. Like I got my last 3 months here, April, May, and June, right? Those are our full months. We're only halfway through July here. So you go through that and you go through all of your credit cards. You go through all of your bank accounts. And most of you guys should have these apps on your phone now, so scrolling through these transaction histories is not difficult. And you're going to manually add up all the amounts you see as you're going down these statements. So let's dive into this a bit, right? So personal side, you've got rent. Your rent is not going to change each month, right? But you can see that I total it up down there, and then I do the average, which is obviously the total divided by 3 to keep it simple. All of these numbers I've just thrown fake numbers in, so don't see it at $1,500. Where do you live for rent, right? I live in California. $1,500 would be a dream rent for me. Some of you might be in Kentucky, and that number gives you a heart attack, right? So I'm just using fake numbers here. Don't look too deeply into any of these. The next thing that I like to do is I like to lump every car expense into the same thing. So that's how much am I spending on gas each month? How much am I spending on car insurance? And then also on my monthly lease if I have one, right? Or what is my monthly payment on my car? So all that together is just car all together, right? Now, you can also, one thing that I like to do on this car is I like to throw in maybe an oil change caveat every 3 months. And so when you're looking at your average, let's say an oil change, let's just call it $100, right? Now, it's probably not. You're probably getting an oil change for more like 50 or 60 bucks, but let's call it 100 and you split that up over the 3 months. You're going to add $30 to each one of those months, just so that in average, we're getting the right number, right? Then your monthly bills. This is your internet, your TV, your electricity, your gas, your trash, your sewage, all that stuff, right? Dining and grocery, I do a little bit of a weird way, right? When you're eating, there are a lot of different things that can go into this, but what I'm trying to figure out with this number is what do I need to survive, right? You'll notice I put miscellaneous shopping on the side, but one thing that I like to do with dining and grocery, any bill that I have from Walmart or Target, I'm going to add in the dining and grocery. Now, why is that? A lot of times that we go to Target or Walmart, and maybe I'm speaking for myself here, you'll pick up some groceries, but you'll also be picking up some other stuff for you, right? But oftentimes when we're doing those Target and Walmart runs for that small stuff, those are usually necessities in our daily life, right? So I put those in dining and grocery because what I'm trying to do here is set up columns of what are the things that each month, no matter what, I need this to survive. And then where you've got that miscellaneous shopping, that's your Amazon, your Victoria's Secret, your shoe shopping, your Express, whatever that might be, right? That's your miscellaneous shopping. That is generally our column where we're going to be able, one, we're going to see the most difference month to month, but also where we'll be able to make the most cuts on our budget. Most of the other stuff is harder to make cuts on, and you can make cuts on it, but it's much more difficult. Ooh, do I make one less trip this weekend so my gas is a little bit cheaper? Maybe I don't go out to eat as much this month, and that can maybe save me $80 here or there. So you play with that, but it's much easier to say, hey, I'm not going to buy myself a new dress or a new pair of shoes this week, right? So much easier to kind of take from that shopping. Then we take the averages out of there, and then we add all those up. So in this case, in my fake thing, I'm spending about $3,000 after taxes in my day-to-day life, right? So as a broker, just to survive in your personal life, this is if you don't have your own office, if you don't have all these extra expenses, just to survive in your own personal life, on this, you've got $3,000 you need to bring home every month, right? Well, now as a broker, goals to set on selling, right? Well, how much do I need to sell to make that? And obviously, guys, you don't want to make the bare minimum to survive. We also need to plan for retirement. We need to plan for marketing and investing in our business, right? Different things like that. But this is how you're going to find out, what do I have to make each month at a bare minimum to pay my bills, right? And then you can do a separate one, as you see that I've done for the business. You can take, what are you spending on marketing? Dining changes a little bit because now it's dining and entertainment, right? Are you taking your team out? Are you taking a client out? Maybe you're taking a referral partner out, right? Different things like that. These different events, those you want to keep track of as expenses that that are going towards your business. These are monthly bills that you have per se, but those might be write-offs later in taxes. You still need to be aware of that. How much do I need to be able to continue doing what I'm doing there? And maybe you want to budget for some growth in that category. In my business, I'd really like to be spending about $1,000 each month on dining and entertainment, taking some people out. Cool, you can put that in your budget. And then alternate employees. For those of you that have grown your business big enough where you have some employees under you, right? What does that come out to be? Is it an admin, maybe a secretary, an office manager, whatever that might be? And then what do those salaries work out to be? So this is an idea of what a budget would look like, right? And again, this one I geared specifically towards figuring out what are my expenses each month for me to survive, okay? Again, I left income out of here because ours are harder to determine, but this will at least let you set the bar. I need to do at least this much work. I can't go to sleep this month until I've hit this number, right? It really helps you as well be planning to where, it might be a week in and you've already made enough money for all your personal goals for the week, for the month. Maybe the next 3 weeks, you're kind of readjusting some stuff to put a little bit more money into savings or whatever that might be, but it's going to help when you know this number. I need to hit 3,000, right? It's also good to redo this once every 6 months to a year, especially for you guys in this industry. Your incomes are going to constantly be changing, growing, everything like that. So stay on top of this. Know where you're at every given point, right? So that's just an example, guys, of what to look for, what to do. But this is how you're going to figure out what are you spending each month And don't lie to yourself, guys. I actually, when I'm finding these numbers, I round up. You know, if my car payment's $333 each month, I'm rounding up to 350 bucks. All right. That's $17. I'm not going to be hurting if I overestimated 17 bucks, right? But I would much rather overestimate and know that I need to get to 3,000 than estimate all the way down. It's so close tied in that I'm estimating I only need to make 2,700 this month. But oh man, if I only make 2,700, it's going to be a tight month, right? So estimate high too. Give you guys that cushion. Round up always. Cool. The next thing, guys, we talked about is those tools that you need, right? Those apps, different things like that. So I want to dive into all the kinds of tools that are out there to help you manage your finances. Some of these are used for your spending and helping you stay in your budget. Some of these are utilized for tracking receipts, expenses. Some of these are more geared towards saving and planning towards the future, right? Investing. And then some of these are all-in-one apps. So it's really up to you guys to do some research on different ones of these, play with some of these, find out which ones work best for you and your business. There is no way I'm going to list all of these on there. There's so many out here. So I'm giving you some ideas to look into. Also jump on Google and look into some of this though. So the first thing is there's computer softwares out there, right? You got your Intuit QuickBooks, your Microsoft Excel, right, which should be on almost everyone's computer. Different things like that that are going to help you creating that budget like I did in Excel. Or QuickBooks will really help you manage your budget and stay to it, right? And bring your receipts in there and everything like that. So different computer softwares that you can utilize. There's all kinds of phone apps, right? You have Acorns, which lets you round up everything to put money into savings. You've got Mint, great money management tool. Expensify. Robinhood is used for the stock market, right? If you're trying to get your feet wet in the stock market and you don't have $25,000 sitting around to go open up a Merrill Lynch account or whatever that might be. Different things like that. So there's phone apps that can play into this for you guys. And then obviously there's web-based softwares, which is kind of like Quote It, right? Kind of like Coverage Builder. It's a web-based software. You go to a website and you're utilizing this software. There's one called Envelopes, one Personal Capital, different ones like that. Now, some of these as well integrate with phone apps, so you could do them as the web-based software or as a phone app. So it goes both ways. But guys, bunch of stuff out there. Find one that works for you. I would even suggest playing with multiple of them. Read up on a lot of them. Play with 2 or 3 of them. Do a trial on 2 or 3 of them. Find the one that you like that really kind of works for your organization process, right? So look into some of that stuff, right? Now, that last thing we talked about, guys, is setting goals, right? And what does that look like? So this is really the most important step in any plan, whether it be your personal financial plan or the plan for growing your business, right? This is so important in how we set a plan to what we want to achieve in life, right? So the first thing, guys, is to make sure that your goals are attainable, right? You got to set realistic goals for yourself. Understand where you're currently at and where you want to be. How far is that gap, right? Know the work that's involved in getting there. Don't shoot too high where you might not meet that goal and then you can be mentally defeated and you can give up on it, right? Set realistic goals for yourself. You guys want to set short-term and long-term goals, right? We always have to have a future mindset, planning and preparing for tomorrow. But that being said, it's just as important to set goals for today. If we aren't making it through today, the odds of us hitting those long-term retirement goals are going to become smaller and smaller, right? So we need to focus on both of those. And then the last thing is save, invest, and reinvest, right? And we'll dive into this a little bit more on the next slide. But first is to save, right? Once you understand your budget and where you stand month to month, you need to set a goal for how you're going to save each month as well. Are we saving to expand our business? Are we saving for retirement? If it is for retirement, that's where our invest comes into play, right? You'll need to set a portion of your free money to invest for your retirement. So when you know you've got that $3,000 monthly expenses, and this month you're bringing in $5,000, now you have some of that free money. How much are you going to move over there to invest, right? And then for the reinvest part, that's reinvesting back into your business. This is like marketing, leads, even expansion, adding an office manager, an admin, maybe buying an office or expanding your office, anything of that nature. So let's dive into some of that, right? The save, invest, and reinvest, right? What does that mean? What does that look like? So here's some little just extra tidbits of advice as we close out here, kind of share some investment numbers with you. So the first thing, guys, is taxes. We are in an industry where we pay our own taxes, right? We are our own boss. So when you're saving, that also means to have a savings account set aside strictly to pay the government, right? The general rule of thumb to avoid needing to scrape thousands together last second is to take an automatic deduction of 25% and put that right into your savings for taxes, right? 25% of everything that you're making as a rule of thumb should automatically be pulled out from your check and put right into a savings account for taxes at the end of the year. Now, depending on your accountant and your tax person, you can get write-offs and all that. Awesome. You might have money left over at the end of the year. I'd much rather have money coming back to me than me having to scrape for thousands last second, right? The next would be to invest based on your goals. And this one's very important, guys, okay? For example, for a younger broker, one of my favorite rules of thumb is to live on your advances and get rich on your residuals, renewals, and bonuses, right? So you're going to make your budget around your advances, what you're getting on all of your new business, and then all of your residuals that are coming in, your renewals month, and even those bonuses that we get from carriers, right? Get rich on those. Those are your spending cash, your retirement cash, your investment, right? That's your excess money where you're going to get rich and build your income up, right? For my older brokers, maybe you're not as close to your retirement goals as you would like. So you might actually use higher percentages, right? You might not want to take you might actually want to pull a little bit out of your advances even, not just your residuals and renewals going to retirement, but maybe even a little bit of your advances. Maybe you're going to live off of a little bit less of your advances in your budget, right? Because maybe you didn't focus as much on your retirement and your investment as you were younger, and now we're trying to hit goals a little bit quicker, so a lot more money needs to go over there. There's different ways to do that, right? So I'm not a stockbroker here, so I'm going to be cautious with my advice here. This is more to get you thinking, right? But this is an investment tip from me that's worked out very well for me, okay? I'm going to kind of refute some of the main logic that we hear over and over in investing from stockbrokers, and that's diversify, 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 right? Guys, my tip to you, if you're going to be doing your own investing, right? Sometimes you'll just go to a broker, they're going to invest for you. But if you're going to be doing your own investing, look for an app kind of like we talked about, like Robinhood, something that's free, that's going to teach you how to invest and give you tools to invest in the stock market. Diversifying is better for our more seasoned investors who have more money to lose, right? And also the people that are closer to retirement. For the younger brokers who are getting started, you can be a little riskier with your investing, right? Let's think about it logically. If you're younger and you've just put $5,000 into your investment account for the first time, and your stocks take a 20% dump in one day, that's a lot of money, and you've just lost $1,000, right? You can make that back pretty quickly in this business, right? It's not great. It's not going to kill you. Now, if you've been investing for a longer time and you have $1 million in investments, right? That 20% loss is a lot different. That's $200,000, right? Now, that's where diversifying comes into play, right? As you've got more money to protect, you're going to stay in a bunch of different industries. So if one industry tanks, your other ones aren't falling with it. It kind of protects you from those big losses. For my newer investors, I actually say the opposite. Specialize in one industry. Focus on one or two companies, okay? I'll use Apple as my example for this. It's such an easy example. You guys can all test me on this. If you specialize in just one industry or one company, it makes it so much easier for you to track all of the breaking news, right? Both good and bad. The markets often respond as you would imagine, right? Either positive or negative, depending on the news that breaks. If you follow one company, and let's say you hear about a lawsuit against Apple, and you're following them every day in the news, you can immediately sell your stock. And then over that next week, as more people are hearing the news and word of mouth and that stock's going to drop 15 to 20%. Well, you just saved yourself that 15 to 20% loss. And then after that week or two of it kind of dropping, you can buy back in, and it's Apple. It's a big company. They're going to start correcting and going back up. Now you've saved yourself that 15 to 20% loss. You've bought back in. You own more stock now as it starts rising. So now you're getting more gains, everything like that, right? Well, the alternative to bad news breaking is good news breaking, right? This is my favorite thing with Apple stock and why I always talk about it with people. Go look at any Apple stock. You look at a 5-year map of it, and you can go to August or September of every single 5-year map, and you are going to see a spike in Apple stock every August or September. And why is that? Well, every single year, without fail, like clockwork, that's about when Apple does their big news release of their new iPhone. And the market reacts so excited. Everybody's pumped. Everybody loves Apple. Everybody loves the iPhone. And for about 2 to 4 weeks, their stock is soaring. And you're going to see consistently, year after year, about a 30% jump in that stock over that 2 to 4 week period of time. So if you know this, if you're specializing in an industry, if you're focusing on one stock, like Apple, maybe you're buying into Apple in July, and it's kind of stagnant for a month, just little ups and downs, but you're anticipating that news break, knowing it's going to jump up. You also have followed the stock so well that after about 2 to 4 weeks, it's going to take a dip and correct. So you're going to sell out at 2 weeks. You've made your profit, you've sold out. And in one trade that year, in a 2-week period of time, you just made 30%, right? Now, don't take this advice and now next year, this August, you guys say, Nick, Apple didn't make me 30%, it's your fault. Guys, I'm using this as an example to get you thinking, right? Think about the industry, think about how the market reacts to stocks. But this is where specializing might help you. You can become the professional or the knowledge base of that one industry, of that one company, okay? So look for that, guys. That's stuff that can really help you kind of get started in taking off if you're new to this investment thing as well. So don't always need to diversify. If you don't have a ton of money to protect, you don't need to diversify. Find something that you're passionate about. If you like sports or if you like electronics, what are you passionate about? Invest in a company that follows that and just be the pro at that company. Know that company. And now, shoot, if you guys sell a lot of United or National General, you probably know their news, right? You're on their website a lot. You know when news is breaking, good and bad. Maybe those are companies you invest in and you just become the professional with NatGen and with United. You know when it's good and bad in the industry and you're selling and buying as appropriate, right? So that's my stock advice for the day. Sorry for rambling there, guys. And then the last thing, reinvest about 10% back into your business, right? Guys, this can be used many different ways, right? Depending on what your goals are for your business. It can be taking your team out for dinner after a great week if you have a team. It can be just getting yourself business cards, pole signs, a website for yourself, right? If you guys are getting started, get creative. But remember, you have to reinvest in your business if you want to grow. So just based on what we're saying here, 25% for taxes, 10% back in your business, 35% of everything that you're bringing in should automatically be taken away from you. You don't have it. 10% is going back in the business, 25% for taxes. Now, if you're going to invest, right, in your retirement, in your future, that's excess on top of that 35%, right? Be aware of these numbers, guys. Think about that when you're looking at your paycheck. Really, you should be trying to live closer to 50% of your paycheck, right? Think about that stuff. So guys, remember, set a plan. You have to figure out your budget first, create some goals for yourself, and then use some of these principles we've talked about on your goals. And then just watch yourself flourish from there, okay? Awesome, guys. Well, if you have any questions, concerns, go ahead and email training@ahcpsales.com or call agency services at 877-228-8773. Again, this is Trainer Nick Murillo, Trainer Nick checking out with you guys. Happy Motivation Monday. Have a great week out there. Hope you guys learned something new, and we will see you next week. Take care.